There are so many investment options out there. It's so confusing. You hear of online banks, time deposits, bonds, stocks, NFTs, cryptos, business, property, and the list goes on. With so many different investment options out there, you might be even thinking, where do I even start? Hi, my name is Enrique Fausto, Chief Financial Architect and Chartered Financial Analyst here at IFE, where we make investing for everyone. And today I'm gonna talk to you about my favorite investment option out there, stocks. First things first, what are stocks? Stocks, shares, or equities all mean the same thing. They all mean a part ownership in a business. So when you buy a stock, you now become a co-owner of this business with whoever set it up. For example, you started your own Korean garlic bread or K-bun business, selling bread, generating sales, having some expenses, and whatever's left is your profits. When you decide to bring in another partner, for example, your brother says, hey, can we expand it? I'll put money in, and then let's do 50-50, I'll sell to this other area. What essentially happened is you both now co-own the same pie, the same business. And because of that, you both share in the profits. Now, this is something that has actually been around for quite some time. Back 400 years ago in 1602, the Dutch East India Company was actually a company which issued the first stock corporation. At that time, what was really hot was the galleon trade. Imagine back in the 1600s, you would need so much money to pack up one ship filled with different kinds of goods, and it would sail all the way across the seas to countries such as Asia. And with that, they trade in different kinds of things. After trading, when the ship comes back, the people who owned that initial ship made a lot of money from the goods they were able to trade. Now, this is a very risky business. Imagine, you have to put so much money to have a crew, to set up a ship, and then you have to fit it up with things worth trading. And once that ship sails, the whole thing can go under, meaning could get hit by typhoons and suddenly smash the ship back to the shore, or you could even be raided by pirates. And so this company decided to be a bit more creative and took the risk not just all for themselves, but shared it with other people. They got other co-investors. Hey, invest in this. Let's all make money together and let's all share in the risk if this thing fails, essentially. So that's how stock corporations actually started. Now let's move on to the next part. How do I make money when I invest in stocks? There are actually two ways. Number one, you can get dividends, or number two, if the share price goes up over time. For the first one, for every business that's able to generate a profit, the shareholders can then talk about it and then decide, are we just gonna pay it all out to all of us, or are we going to reinvest back in the business? For every stock corporation, there's typically a dividend policy, meaning there is a rule that they kind of agree upon that, okay, let's pay out 50% of the profits and then let's reinvest the other 50. So when the stock that you bought in this company decides to pay out dividends, then as a shareholder, you are also entitled to cash dividends. So it's pretty fun. Back then, they'd give out checks. Now it's typically just credited to your online stock brokerage account. But cash is cash, so that's one way for you to make money. The second, and I think arguably the more exciting way, is when the stock price goes up. If the business you're able to buy a stock from is able to grow over time, to increase its sales, increase its profits, and increase its value over time, then the stock price may go up. And when it does, when you sell it, you're essentially a much richer man than you were when you first bought the stock. So those are the two ways to make money from stocks. And here's the thing, this is actually something that we wanted to dig a little bit deeper on, wherein we tried to figure out, does one really make money in stocks? And how does it compare to other asset classes or other investment options? Here at IFE, we did the research. We dug into the numbers, and what we found out is this chart, which I will show you now. As you can see, there are three lines on the top, middle, and the bottom. At the top, you're going to see your stock market. showed by the Philippine Stock Exchange Index, which is the basket of the top 30 stocks in the Philippines. And what you could see is it's a roller coaster, but it has actually massively outperformed the other asset classes. In the middle, you see the bonds, which as a proxy, we use a specific bond fund. And on the bottom, you see your money market or cash. These are your shorter term investments, specifically the 91-day treasury bill returns. So now you could see here that even despite COVID, stocks have actually outperformed other investment options over the long term. And I know some people might be skeptical, or you might have some haters there saying, maybe you're cherry picking the data. Is this really the thing, not just for the past 15 years, but for different areas, for different time periods? So we've dug around quite a lot, and what we found is that there was a study done by Wharton professor Jeremy Siegel, also author of the book Stocks for the Long Run. And let me show you now the snapshot of his 200-year research. I'm not kidding. This was back from 1802. He was able to find data on this. What does it show? As you can see, it's exactly the same relationship. On the top, you could see that stocks have massively outperformed all other asset classes such as bonds or bills here, treasury bills, and of course, even better than inflation. Just as an added bonus, you could see here that gold apparently is able to hold its after inflation value over time. But beyond that, not so much, right? So now we know stocks are actually the best performing asset class based on research in the Philippines and even in the United States for long periods of time. So then, now you know, as a long-term investment, stocks is definitely one place you should be looking at. So now that you're convinced that it makes sense to invest in stocks, how do you even get into it? After opening your own stock brokerage account, you'll have to dig into the research. You have to understand, when I buy this stock, what is the business? How does it make money? What is this specific business's competitive positioning versus the rest of its peers? How does the industry really work? And third off, how is the management like? You're going to become co-owners with these managers. So now you have to know, can I trust these people? Do they know what they're actually doing? And can they make money for me in the long run? One framework we also like to use is, if you're building your own stock portfolio, you want to build BLD, blue chip, long-term, discount. What do I mean? First things first, you want to stick to your blue chip names. Blue chip means your long, large, long-standing kinds of business wherein you know the people running the show have been doing it for a long time. In the Philippines, these include the likes of your SM, Ayala, PLDT Globe, the kinds of business that you know have been around for a long time and will continue to be around for a very long time into the future. These are run by people who have been doing it for decades and they know exactly how the business, how the industry works. Second, you want to buy for the long term. You want to check, what are the long-term prospects of this industry, of this specific business in that industry? Do you see that they will be able to generate profits for the long term for you? And lastly, you want to buy at a discount because, as you remember, you can get money through dividends or if the share price goes up. So if you are able to buy the same stock at a discount, you have a bigger chance of being able to generate profits when it recovers or when it goes up in the long term. So that's it, BLD. Of course, you should always do your research whenever you get into any money and whenever you get into specific stock picking. Now here's the thing. The asset class performance we were able to show you through the research talks about indices, broad baskets. And what we found is that over time, there's actually a cheat code. There's actually a way to gain the kind of long-term returns that the entire stock market is able to give without having to do the heavy, intensive research it takes to properly choose stocks. Are you interested to find out what that is? Tune in next week by clicking subscribe and clicking the bell button. Tune in for when that comes out. So now, let's have a quick recap of everything we've learned so far. What are stocks? Stocks are part ownership in a business. If you don't know what this business is or how it's being run, then you have no business buying this stock. Second, how do you make money in the stock market? You can make it through dividends when they share out the profits of the business. And number two, if the share price goes up and you want to know the business, the industry, and the management whenever you do so. And lastly, what's a quick framework to use? You can build your portfolio. Blue chip, long-term, discount. And with that, I hope you are now considering letting stocks be a certain portion in your portfolio. Not everything, but the portion that you are willing to sit there and invest for the long term to allow you to grow your wealth over time. So with that, I hope you were able to learn something. What else do you want us to talk about in this channel? Put it in the comments down below. Is there anything new that you learned? Is there anything interesting that you want for us to debate about? Then looking forward to it on the comments. So with that, my name is Enrique Fausto, Chief Financial Architect here at IFE. Looking forward to talking to you again soon. Bye-bye.